Morning, Steve Free in Chicago with the morning grain comments. Overnight prices are a little bit easier, led by wheat. Going back into the negative bias, yesterday we had an interesting day in which wheat prices rallied sharply. Some people think that it was mostly technical when the RSI in the nearby contract dropped below 20. It rallied back to 40 real quickly on some short covering. There was some talk that maybe Ukraine might dry out, and there was some talk that we could see a little bit less competition out of Russia, but the window for us to get new export demand is slowly closing as the Northern Hemisphere crops begin to grow. We also heard in the cash markets here in the United States that domestic demand for soybean meal was better than expected. Ethanol demand was also better than expected. Farmers aren't selling, and so the pipeline is getting thin, and that's helping cash market basis levels as the commercials reach for grain. The problem with that is that the farmers got a lot to sell, and eventually they will have to sell, especially in this March-April timeframe as they get ready to plant the 2019 crops. We saw a private estimate yesterday lowering the bean acres for next year from their previous estimate, showing a slight gain in corn. Wheat acres are down from a year ago. USDA will have the official update on plantings for farmers by crop at the end of this month. They also will give us grain stocks as of March 1. As far as weather is concerned, we've got a system that's moving across the Midwest today and tomorrow. 10-day outlook looks drier and warmer. We'll see if the 11 to 15 day brings rains back, and we continue to see above normal rains in Brazil and good rains in Argentina. As far as the funds were concerned, yesterday there were big buyers of wheat, corn, and beans. We still say the managed funds are short 70,000 wheat, 200,000 corn, and almost 80,000 beans. So the United States Department of Agriculture yesterday announced that because of the crops are not fully developed, they are no longer going to be using objective yield and surveys for the August crop report. So that kind of diminishes the importance of the August crop report and probably gives us a better idea of the crops based on the September crop report using objective yields and surveys. So it's, for our perspective, it's just one less thing to trade in August. But in general, we'll be watching anything on the trade deal. The U.S. Trade Representative will be talking to Congress today, and hopefully, like yesterday, they will say some positive things about the end is near as far as the resolution on the trade deal. We'll be watching U.S. weather as we get closer to spring planting weather, and we're watching some of the technicals that, since we bounced yesterday from support levels, to see if we can hold those support levels and make any gains into the spring planting season. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.